Well, all right then, let's get into it. Back with the charts here, trying to figure out what's going on with Bitcoin. The answer, if you don't want to watch the whole video, is really nothing has changed. Still, I know it seems like this has been a while since I had a video. I think it actually has been quite a while, but that's because really still in the channel, still doing nothing. So let's take a look at a couple of different things first. So originally the thesis was about these boxes right here, essentially are thresholds for liquidity as well as kind of support and resistance. And I drew some lines saying, hey, if we're going to go up, we're going to bounce here. We're going to go up if we're going to go down, blah, blah, blah. But if you actually go back and watch that video from, I believe, August 5th, it was on the YouTube channel or in the Facebook group, I corrected at the end and said, I see what I did wrong here. Essentially, what I did wrong is I just lackadaisically drew in here, hey, if it goes up, it'll do this, if it's down, and blah, blah, blah. But I didn't counter the fact that, or explain the fact that if it was to drop quickly, obviously it responds quickly, hence this big drop and pushing back up. So what we see here is a couple of things, and I'll explain this yellow line here in just a minute, but it's basically the channel. There's a channel in here somewhere. So kind of first things first, parallel channel. Let me just kind of draw this in so I can explain it here in a minute. But basically at the end of the day, you have it going up and down, up and down, up and down. And we did break this kind of channel. And I'd kind of said that it makes most sense. We're going to fall down to this level. So this was our buying level. Last time you talked to me, or last time I made a video, was like 49,000 to 53,000. Really kind of somewhere in there. Anything really under this mark right here, under this 53.5, was considered a buying area. This little yellow wedge area came back all the way through here. It acted as, oh my goodness, can I do this? Can he do it? It acted as support right here. So it came down, went up, came down here. You could consider this a deviation, but it's interesting that it flows through. There's also eating up all this liquidity with this green candle here. And then obviously reversing, going through as well. And then when it came back up, interestingly tagged the top. So it kind of forms a little bit of a support and resistance level. Ends up as resistance here. And then you're continuing to come over to really where we are today. And then obviously I had some consolidation right between this support and the resistance levels of this box. And so it kind of acts as our natural support and resistance. We're looking for kind of things that might add up. So this range, if you go back and watch the last video, if it was going to fall, kind of thought it would bounce like right here around 53-ish. I had several orders down to, I think, 50, and then it went down to like 49, which is absolutely crazy. But we did highlight also the fact that it did definitely, it touches this. This is also where it is. Let me see here. If I was to go and add a bunch. Okay, not enough. Here we go. So what's interesting is it went up to here, acted as resistance, and came back down. But what I was thinking there was another resistance level. Where was it? Maybe it was in here. I don't know. I'm off on a tangent now. Sometimes you see things on charts and you're like, oh, this is interesting. Let's go find out if there's more confluence. So at the end of the day, this yellow box was kind of our buying area, right? If it came down here, it did, and then it bounced back up. Now, once it came back up, it's got to come back down and test this area support. And pretty much once it held this area, it's kind of like, sweet, what's up? What's next? It's going to be 60,000. And so we came back up, we hit 60,000. We went ahead and tested this as that would be resistance, meaning that it gets rejected here, comes back down, obviously going back up, and we're going to break through. Once we break through, now it's just a matter of, okay, what's next? Again, our range highs are up here, but we're definitely hiding in this channel back and forth, and this is essentially the trading range. And you can move these around 1,000 different ways. I probably say I'm going to go with more of the close of the candles, not the wicks. But if I was to kind of dance this around a little bit, I could say that's maybe the top, right, for the day here. But at the end of the day, what this is also known as a megaphone pattern. It's funny because it sounds like I just make this stuff up. I promise it's something I've read somewhere, or there's some sort of statistical significance to it. But all that means is we're totally jiving with the top of the channel here, but the bottom of the channel not so much. And so it's getting wider and wider and wider. And typically anytime you see a big pump up and then we make this consolidation pattern, if it stays in one area, it's called a bull flag. There's a lot of different names for it, but that would be bullish. But when it starts to expand and becomes this expanding channel, also known as a megaphone type of an approach, right? Megaphone just meaning this kind of a shape. Oh, I'm getting louder. Okay. And really, that is also pretty bullish. But really, what that means is it needs to break out. It needs to come back, test this. So it needs to go up probably to actually 73-ish. I'll show you the kind of maybe 2, maybe 3 levels that we're watching. And then it needs to come back down and test this. And when it comes back down and tests the top of that channel, which could be really, depending on when it is, anywhere from 65,000 to 68,000, again, depending on when it happens here. But it'll go up like this. It'll arch back over. It'll come back down. It'll bounce here, and then it'll go back up. But we've ultimately got to break out of these this range. And what this range looks like if I, oops, come on, guy. Really, if we were to change this, let me kind of share. This is probably like one area. You know what? I take that back. Let's do this as array. That way I don't have to straighten it every single time. Oh, man, I keep clicking the wrong thing. Here we go. Okay, so here's one area, and let's just make it orange for funsies. That's not orange. That's orange. Okay, so that's one level that we're going to hit. This is another one right here. So if we copy and paste that and move it on down, right, we'll say like right there. And then obviously, where's our top? It's going to be right here. So cool. That's literally 3 areas outside of this zone that really isn't doing much. If you wanted to get really granular with it and say, I want to make this as tight of a pattern as possible, where's the most connection points along here? Probably something like that. This, much like all these other ones before they become unstable, and so they have to sell off. This becomes unstable, and so it has to sell off, blah, 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 blah. This is obviously extremely unstable. If you look at this pattern right here, very unstable. It can't just go like that forever, especially with this little of candles. You need big candles like this guy over here. You need boom, 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 and you need to typically move somewhat fast, and that's going to push us up. But we can't push up to the next thing until we get out of this thing. And so just to kind of give you an idea, there's really nothing going on because it's, even though it's a range of 73,000 down to 49,000, crazy that that's a conversation we're having. That is the range technically from the highs to the lows. I do think statistically we've really kind of proven this point, which sucks because I wish I would have bought more, of course. But we have a little bit of a head and shoulders pattern as well here. That is acting a little bit more, I would say, bullish, right? So you have anytime you have, you know, a big drop in price and then a matching one over here, but then there's one lower resistance here. So let's just say, or support rather, let's just say that there's enough volume to push it off. This is the big sell-off. This is going to be considered very, if it's upside down like this, it's going to be considered bullish. And you can actually measure that by taking a look at the neckline, which would be, I don't know if I want to do this on this, I'll just do this. So let's just say this is the neckline and this is obviously the top. You literally can mark it and you can measure the distance from here to here. Now what you can do is you could take that line and you can move it to where the neckline was. This is about as crude as it's going to get. And it tells you really roughly where we're at. So with this absolutely phenomenal drawing that I just did, it's saying 78,000. It's probably a little higher than that. But just to give you an idea, it kind of helps you with a little bit of a measured move here. So anyway, all right. So we've got our upside down, you know, head and shoulders here. Again, that's going to be bullish. We've got this bull flag slash megaphone pattern. Again, bullish, but bullish means nothing if we can't break above this. And this is why there's really not much to talk about unless you guys just want me to cover something specific. It's the exact same range all the way back to, well, I'll even go to here, all the way back to March. As crazy as that sounds. Anytime it's doing this, this is for traders. This is where trading happens. Once it breaks out of this, there's really not a lot of trading opportunities. We're all just going to be sitting and waiting, you know, because we're all just going long. And where does long lead us? You know, again, that's going to be up to several different variables. So that's kind of some of the things that I'm looking at right there. Let's see what else I also had a couple of different, that's, again, I drew that. apparently in the past. I wanted to talk about my perp chart here. So if you were to take a look at a little bit closer here of kind of what we're looking at, obviously I was planning for this measured move. I expected it to retrace down to 50% of, whatever that wick was. That was a pretty big marker for me. Oh, I'm moving things all over the place. So that is on the weekly chart, 50% was here. And on the daily chart, it's here. I don't know that that's right. Now I'm looking at that. I think I might have moved it and screwed it up. But the point is that literally it came down and we can actually measure it. Boom to boom. 50%. It is. It's right here. So what I was looking for is the daily candle, the daily wick to get filled, this big wick right here. I want to see 50% fill to here, which is going to be, about 51,000. So I missed when it came back down to retest. This is where I wanted to go long. I had several orders in between, like roughly here-ish, maybe 52. I think it was under 52. Down to, I think it was like 48 or 47, just in case. Literally none of them got filled, so it doesn't really matter. I missed that trade. On to the next one kind of a thing. But what's really kind of interesting is really where everything is kind of, when you look at the price action, there's a couple of things that we're looking at, right? Forget this wick for a second, because I think we're past this. I think this third of a fill right here, but specifically it happens to hit 50% of the weekly wick. When we look on the weekly chart, that's a little bit more interesting because it shows how big of a candle this is. And when we dip down, we filled 50% of it, which is, like, in good faith, hey, I think we're all, we've tested this price range. And you never know, unfortunately. You never know, which is why I don't love following the weekly wicks, because, like, again, 53,000 to 49,000, that's a pretty big deviation there. But it looks like that did get filled. I really don't see kind of filling anything else except for maybe on the daily chart, if it was to come back down, right? Which it's going to come back down eventually. It's just a matter of when, right? If we go back and look at this channel, I probably would have guessed that it would have got up a little higher, maybe 67. It stopped around 66.5, which is fine. Again, there's really no telling, but you kind of get as conservative as you possibly can, and you're like, all right, where's it going to stop? Probably somewhere in this area. It might deviate above it and then come back down, and it still might. But this is a pretty big red candle, so it might be stopping there for a second. But either way, when we come back down and we look at really what does it look like to come back down, it really needs to retest really whatever was resistance. It kind of needs to retest it as support. And so here we are kind of looking at this. And what's really interesting is the 50-day moving average. If I was to pull up a chart and go to each time frame, this is kind of the direction that they're facing at the moment. But the weekly 50 EMA is kind of on the lower side, and I'd probably say that's the bottom, right? If we're gonna come back down, it's probably gonna be somewhere around here, 56, I would say. So I think that instead of us filling this again, because it's gotten a 30% fill on the daily, it's got a 50% wick fill on the weekly. We have our inverse head and shoulders here. Our megaphone pattern is increasing, which again just is statistically showing us that eventually it's going to break out one way or the other, typically up. But then, we've gotten overextended. So where are we pulling back to? We might pull back to, or we've already pulled back to the 4 hour. But on the daily, that's down around 61,000. I think probably more likely is going to be, if we zoom in here, I want to show you my opinion on this, is you definitely see all of the bottom of these candles right here, right? So if we were to mark that just for a second, look where the wick came to. So the wick came down and filled what was essentially the bottom of the lowest candles. So the next fill, if it's going to drop again on the next candle, we're looking for it to fill pretty much all of the wicks. So that puts us around 62,300, 62,500, 62,000 total, but definitely kind of in that range. And really what that's going to do is it's going to come back down. And the question is what happens from here? Does it act as support, bounce off of this? And now we're moving up. And when we're moving up, it's just simply going to the next, this range, 69, 72, 73, right? Filling these major wick points, like kind of breaking out. That would definitely be a reason to. And that would kind of be our last long opportunity. I mean, you can always dollar cost average, but if you're, for example, if you were trading, you'd want to, you kind of want to buy this dip basically. My orders are down here in the wicks, and so I'm hoping that it fills. Chances are it's going to, most traders, they put in a trade, let's just say like right here. And they're like where this orange line is, and they're like, cool, I'm going to put my stop loss right here, literally just below these wicks, because chances are literally those get filled and then it goes up. So this kind of seems like a low risk approach. The problem is these are called stop hunts, and the market makers can actually see these are placed orders. So they know how much liquidity is in the zone, and they can sell it off, take that liquidity, reverse it, and obviously go back up. This is where they would build their longs. So that stop hunt, if it comes down, that's why I go a little bit, lower sometimes when I'm trying to get an order filled, is I'll fill like a little here, a little here, a little here, and then I'll put one down here below the wicks in case the stop hunt happens. But basically that's kind of my guess, is that if we're going to come back down, it's probably going to be this 62. I'll say 62.5. Let's find 62.5 and just call it a nice round number. There we go. We'll call it 62.5. Because every exchange, these wicks are a little bit different. In fact, if I come over here, you can see that this kind of makes a different pattern. So it just depends on the liquidity. So anyway, all that to say, I think that's probably, it's going to come down. It's going to hit this as support, and then we're going to be going up from there. If it doesn't, we still go back to kind of that original thesis, which is sweet. Where is kind of that middle range? It's going to be this range right here, from like 59 something thousand to probably 60,000, because it's just, again, a nice round number. And it's a nice psychological number. If it continues to drop again, I don't think we're going lower than 56,000 anymore. I think that's kind of tested. We've got a couple of things coming up on the market. Chinese markets just started stimulus, so they're printing money essentially, which goes into their market, which is going to pump their market. So Hang Seng, I think, is HSI, and this is going to be the futures. I mean, look at this. Boom, 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 boom. Huge gain because of money printing. SPX, the SP 500, obviously same thing. Here's another example of a head and shoulders, but not inverse like we have it, but head and shoulders. What happened? Boop, it dropped. Ours is inverse, so if this is upside down, it's going to go up for us in that case. But this is just on a tear. And so when you look at the total liquidity in the markets, or the M2, the more liquidity they pump in here, the more these assets are going to continue to pump. And that's what's crazy is, basic finance that you're taught in school does not account for stuff like this. It absolutely teaches you the opposite, that all this extra liquidity is going to cause the market to crash. And we're just not seeing it because they really don't want that to happen. They don't want anybody to be uncomfortable. That would be awkward. A government official making people awkward. Look, guys, what do we have over here? Notice this cone pattern? And what happens? Boo! We explode out of it. Then we come back down. We test it as support. Now, this is clearly a deviation, which is great from that concept, but that's in your favor if you're going long. It's just cheaper, but it goes up is the point. And again, statistically, this is the first couple of candles is really all you're looking at for the statistics anyway. So let's see. Was there anything else that I wanted to? Let's look at the futures and the gaps. So the last time would have been April 5th, which would have been, like right here. So I'd made a comment probably about how the markets are closed over the weekends. This is when the Japanese market, I believe, crashed. And so huge sell-offs, it creates a gap while filling this gap, which is kind of hilarious. And so this one, let me make this, I don't want to delete it in case I need to reference it again. Let me drop that down. And there's another one in there. I might just have to move it. So this one got filled basically when technically by these two candles. This larger one obviously gets filled mostly by this one. It gets filled by this one and it consolidates. But this new gap that we had in here, once this sold off, it came back up these wicks overlap. And where did it go? Right at the tippy top before selling back off. So this now has been filled as well. And really our last gap that we see here is maybe, nope, not even right in there. This gap got filled on the next candle, which is great. Again, these are happening kind of fast, but we don't have any new wicks. And so all the liquidity has been eaten up as far as the guessing. Which means our only big ones are down here at the bottom, and chances are we're not gonna see this guy get filled at this point, which is totally normal. Just like this one probably won't get filled 100%. It's just gonna be your bottoming tail, your bottoming wick, and that's okay. Let me think about what else I might want to show. At the end of the day, in fact, I've got when you look at the job rates, when you look at the rate cuts that are happening, they just cut the federal funds rate, which is basically the rate that the banks can borrow at. They've cut that and made it lower, so it's cheaper for banks. So in theory, it's going to stimulate and provide more lending. It's going to provide more lending, and it'll go from there. Really kind of last thing is I really want to show you this. So what's crazy is I used to use a site called Look Into Bitcoin. They got acquired by Bitcoin Magazine. So you can kind of go to Bitcoin Magazine. You can pretty much look all this stuff up yourself. But this is really zoomed out. Okay, this is the stock to flow model. If you followed me from the beginning, or like 2020 or 2021, a lot of the fundamentals of Bitcoin are based upon, in my opinion, the stock to flow model. Which is a guy, he calls himself Plan B, meaning Plan Bitcoin. And his entire thesis is based around the stock to flow modeling of, silver, gold, using that ratio and finding similarities within it. As you can see, we have tracked it pretty dang well, and we definitely deviate from it at certain times. There's been a lot of kind of concern with, holy cow, this time's different. We had the halving. Once the halving happens, it really kind of needs to ramp up. Totally true. But if you kind of compare these different areas, you'll see they're somewhat similar. We go through this orange-yellow area. We kind of have to get back up to where we really need to be. Our fair value line right here for the last or for the 2017 market was, let's just call it $4,000, and went up to 17, 19, 20, almost 20. That's right. And then our fair value line for this run was maybe 50 grand, and it went up to 70. I think it was 69. And so now our fair value line, when we look up here, is just an insane, unbelievable number. I almost don't believe it. Let me see if I can narrow. It may not let me because I'm not signed in. But our fair value line is at $452,000 of Bitcoin, folks. That would be freaking unbelievably great if that would just happen for me and for you. But there's definitely other kinds of indicators, all of which have their own mathematical approach. The main one I wanted to show you is the rainbow chart. I probably talked about this a long time ago. I'm not the biggest fan of the rainbow chart. I think standard deviation is greater than what they say that it is. I don't really have a way of proving this, but this is what do they call it? Not form fitting, but whatever. You're pretty much looking at the data and you're saying, oh, this modeling fits, so this must mean that's what it is. And you're supposed to come up with the modeling, then you're supposed to overlay the data, and then if it matches, you're like, okay, so that's a sign. Now we need to do it 50,000 more times or whatever, and start to find some confluence. The point here is, what are you seeing? Obviously, we're above the rainbow here, above the rainbow here, above the rainbow here, and now we're starting on this bull run here. We hit the top of the rainbow. Then over here in 2021, we are a couple of down, and if I was to make this bigger because it loves me, come in. Okay. Really over here, we kind of have, again, a high price of 70,000. And where does it go? It goes to the orange, right? And so one of the arguments, and I've heard Benjamin Cowan, Dr. Cowan speak of this, as well as many others, that there's diminishing returns due to the logarithmic scale of Bitcoin, which is logical. But you're going to have diminishing returns, right? It was out, and then it was in the reds, and then it was in the oranges. And so where's it going to go? Is it going to go to the blues? Is it going to go to the yellows? Very possible. But yellow is about 150,000. Orange is about 200,000, or light orange. The medium orange is 386. And then you got like 500,000 up here I'm not sure. It's hard to tell kind of how it's skipping around here, but you get the point. The main thing that I wanted to kind of share with you is, again, don't doubt, just zoom out and remember the fact that, it was at once at $29 and it crashed all the way down to $3. That's a monster drop, percentage wise, 1,000 to, $200, 80% drop. So again, we're just doing this over and over and over again. And the more money that gets into it, especially around $400,000, $500,000, we're going to start to see a little bit more stabilization because the money flow can't move as fast. Not because of the networks or anything like that, just because there's not as many players. In fact, the more transactions you have, the more stable any network is. It's like, the network effects of Facebook or of YouTube. The more users that are on it and the more users that are consistently using it, it provides stability to the overall network as well as the platform itself. It reduces its risk by increasing its users. And so I'll definitely do some looking for you guys on a couple of different things. When it comes to network effects, I've seen several charts comparing, blockchain technology to the internet, and that we're outpacing it. And that's probably true. Same thing with AI, but it's very hard to quantify a lot of these things in the short term because these are all factors that a lot of times are going to be lagging indicators. For example, this M2, of course they want me to pay here. That's fine. This is not logarithmic though. So this is not going to tell us anything. Okay, well, if this was a logarithmic chart, it shows you their global liquidity, which I'd mentioned, compared to the Bitcoin price. And logarithmically, they actually line up pretty well. And as the global liquidity goes up, your Bitcoin price will go up. And this has been a pretty big topic over the last month and a half to 2 months. Whoever kind of put these two correlations together, maybe it's been longer than that, and I'm just not paying attention. But global liquidity has been increasing. No one's surprised about that. And it's going to continue. Why? Because we're going to print more money. So if you'd like to read more about this, you can go to bitcoinmagazinepro.com and go to their charts. You might have to create an account. I don't think you need to pay. I used to pay for this stuff, but so much of it is free now that, again, for me, I really only care about this part, the chart part, because from a fundamentals standpoint, I'm already kind of sold on it. So that's that. I'm trying to think if there's anything else. I think that's kind of it. Again, if you'll go back and you'll review, if you really want to review that last video that I did, maybe watch the last 5-10 minutes. I kind of talk about this scenario playing out. I talk about kind of this being, I think because it was on this day, right? Yeah, because it was on this day. I talk about kind of a fast recovery. And then it's just a matter of where do we find traction? Where do we find that range that we're actually going to stick in? And we've kind of had both. We've had not only a sell-off, but we've had a run-up. So where do we find stability? You can look at this dotted line in the middle of this parallel channel. Again, it doesn't really mean much unless it happens to work out. This is all just making the data less useful. But again, I'm looking for multiple confluences, lots of different things. And for me, the most obvious, regardless of all of these channels and lines, is really just what is the price action doing, and looking at what the candle is, what the wick is doing, and that kind of tells the story. So I hope that is helpful for today. At the end of the day, it's still the same conversation. Nothing's going to happen to Bitcoin until we either literally break above 73,000, and we probably have to retest something, around 69, 70,000, meaning we break up and then maybe we come back down to retest it. And you got to remember that could be on the hourly chart. That doesn't necessarily mean it's going to be, on the daily chart. Like for example, here's a range where it's going sideways. It goes up. It doesn't necessarily sell back off and retest this. Although ironically, you could say this is retesting this, but on a small time frame, it will retest and then it will be off to the races for the next big run up and then consolidation. And what does that look like? So I hope that helps. And we'll kind of keep it going from there. Have a great day.